Hey, good morning, everybody. I know an awkward start time. I appreciate those who came early today because, again, I mentioned I was going to go on 8:25. We scheduled for 8:30. So let's get right into it. What's potentially going to happen? First off, CPI is coming out at 8:30, which is in 4.5 minutes. We're going to add CNBC and bring that in live. But let's talk about what's going on in the market right now and what could potentially happen today. Understand, I haven't played my lotto CPI plays yet. What? CPI is coming out at 8:30. Have you not played your plays? All right, because here's my game plan. My game plan is CPI comes in low, market spikes. I'm buying puts on the spike. Opposite, CPI comes in hot, which I'm thinking market dips substantially. I'm going to wait for the bottom, buy calls on the dip. What positions am I heading into today with? Three positions. I'm in AMD puts. That's number one. My second largest position, I'm in Uber puts. We spoke about that yesterday pre-market. And then I'm in a few SPY puts. But here's the problem with the SPY puts, and here's the problem with the market and why it might spike. There were a ton of SPY puts sold with short expiration towards the close of market yesterday, which makes me think they want to pump the market off any CPI number this morning. So that made me a little weary. That's why I was cautious. But let's talk about some main stories and data before we get into CPI numbers, which are dropping at 8:30. And I'll mention what the estimates are, what I think is coming out. We've got rising rates, which generally lead into recession. We have 2 months of CPI revised higher. Let's remember last month we came in at minus 0.1%. The actual number was plus 0.1%. So they missed by 0.2%. If the actual number had came in correctly, the markets would have likely dropped instead of spiked. So again, market manipulation. How can they come up with these revisions? Strongest jobs reports in years. We had that 2 weeks ago on the Friday. It came in at 518,000. The estimate was at 186,000. As jobs are stronger, the Fed must still be as hawkish, okay? 6% inflation. We have rising oil prices, and we have the worst earnings since 2020. Understand, as interest rates go up, as the US dollar goes up, earnings will come down as PEs come down. And generally, the average PE of S&P companies is around 15 to 17. We're currently sitting at between 21 to 25%. So the markets could technically come down, 8 or 9%. If you figure that out on the SPY, you're talking about 30 points. You're talking about 380 on the SPY. So yeah, bull case scenario, markets are going to run strong. Numbers come in light. They keep buying the market. CPI presses 420 today, right? It's going to do it today if the market's coming strong. And we're going to see 440, 450 in the short term. Okay, opposite direction, bear case scenario. Markets come in hot today. CPI numbers come in hot. The market drops 2%. We see the SPY close around 405, understanding that 380, 385 is in the SPY's future. So again, we've got 2 minutes till that comes on. We'll mention the US dollar. I took a picture of this yesterday. It's at 103.29. It was as high as 103.80 yesterday. Then it dropped overnight. I believe we went under 103. Let me just tell you where the US dollar is sitting right now. The fact that it's moving so much before the numbers actually come out. We were 103.26 at the time of the picture. We went under 103 this morning. So right now we're sitting at 102.97. That's one of my key factors I'm going to be looking at, as well as the 2-year and the 10-year. What else did I want to bring up? Well, let's get back to my pictures here. Dollar, yes. CPI. Okay, here's what's interesting about the CPI. And again, we're dropping that in 1 minute. As soon as it comes on live, I will share the screen. This week's CPI report is the first that will be calculated using new methodology. Understand, the previous CPI used to go back 2 years. So when we were looking at CPI in 2021, we were going back to 2019 and 2020 and taking the average of those 2 years and taking the change. Now we're only looking at 1 year. So all the CPI numbers for 2023 are only going to reflect numbers from 2021. So will this... the convenience of changing the way you measure CPI, will it affect the actual data? Again, I've run my numbers. We've got other companies that ran their numbers. I'm just going to try and get to the list right here. Ameriprise 5.8, Bank of America 6.1, Scotiabank 6.1, Barclays is saying 6.2, Credit Suisse 6.2, JP Morgan 6.2, Wells 6.2, Visa 6.3, Goldman 6.4, Morgan Stanley 6.4, and Nico 6.7. The average is 6.2. Okay, I think we've got it coming in right now.
7.9%. So getting back towards 3.7. Let's get it over to Rick Santelli. Rick.
Yes, the January read on the Consumer Price Index headline number expected to be up 0.5% delivers exactly that, up 0.5%. And we know that minus 0.1 originally released for December was modified a week ago with benchmark revisions up 0.2, up 0.1%. So this was as expected. Now we strip out the all-important food and energy, also up exactly the expected amount of up 0.4. Now, the big numbers. CPI year over year, and this number has been going down. It is 6.4%. 6.4%.
That's high.
This follows 5.7, and it is the fourth number in a row in this series to move lower. And if we look at the year over year core, we're expecting 5.5. It is higher at 5.6. But is sequentially lower than the 5.7 in the rearview mirror, extending the run of seven from the, excuse me, on the core, this is 4 in a row at 5.6. 6.4 headline is 7 in a row, down from 9.1%. That was in June, and that was the 4-decade high. Now, here's the fly in the ointment why rates are going up. Even though the year-over-year numbers are each 1/10 lower than the rear view mirror, they are both a little higher than expectations. 6.4 was expected to be 6.2. 5.6 was expected to be 5.5. And here's the rub, okay? If you take X food and energy and then X shelter, that's now known as the super core. Now, I can't dig down into the data that deep, but many are doing that as we speak because shelter last look in December when we were up year over year 5.7% was over 50% of that number. So super core is important because all of a sudden the Federal Reserve is very concerned about what's going on only with the core service sector. And that's what's left in the super core when you take out food, energy, and shelter. So rates have moved up, but not that much. We're at 370. We're right at 366, 367 pre-number. The pre-Dow futures are hovering just about at the same spot. And remember, if they go much over 34,407 and they're close, that would be the highest number going all the way back to January 17th on an intraday basis. So this number might be higher than expectations on year over year, but it's behaved on actual numbers, and the markets seem to be taking it in stride. Now, back to the panel.
Oh, my God.
All right, Rick, thank you.
All right, thanks, Rick Santelli. All right, so let's talk about what he said. Basically, the year-over-year number, the estimate that I was reading to you before I went live with CNBC, the average or the median prediction was 6.2. Understand, JP Morgan came out and they said if it came in 6.2 or 6.1, the market was going to shoot up 0.5% to 1.5%. They said if it came in at 6.3 or 6.4 and it came in at 6.4, the market would drop 1 to 1.5%. Well, shit, what they told us and what we're seeing isn't lining up, meaning year over year, we came in a little hotter, 0.2% over the median or what everybody was thinking, 6.4. The market should drop 0.5% on the SPY to 1.5%, which would be anywhere from 2 points to 6 points. You're talking about 405 to 410 on the SPY. Right now, pre-market, I think we're sitting at 416. Okay, makes a little more sense. I guess we're back down to 414. But as you can see, let me just show you. I'm not even sure if I'm sharing this with you guys. No, I'm just looking myself. Okay, let me see if I can share it. Okay, here we go. This is what I was looking at. I'm looking at the SPY pre-market, 414.74. But if I was going to break it down and show you exactly what the market did right after the numbers came out, I would show you my phone right here. We had a nice drop. Markets turned red, which is what the institutions and the analysts told you was going to happen if we come in at 6.4. And then what happens? Buy up the dip. So am I believing this? No, I actually expect the markets to drop today it's crazy because I feel like it's like me fighting the entire world, because the markets, all they've been doing is buying the dips. Bad news comes out, they push the market higher. And you and I, as retail investors, or anybody as investors, is saying, okay, I'm reading into the numbers. Higher rates mean lower earnings. Lower earnings mean a drop in, mean the PE will go up. So meaning the price has to come down for the PEs to stay in line where they were. So the fact that the market is being bought off of these higher than expected numbers is kind of surprising. Again, I don't really believe any of the action we see pre-market. Volume on the SPY was so light yesterday. So I'm going to let the market tell me that it's going down, meaning I'm going to look at the dark pool levels of the SPY from yesterday. I'm going to look at the dark pool levels of the SPY as we go into today, and I'm going to look for rejection and support. If I don't find those levels, then I cannot enter any trades. Okay, so let's talk about the dark pool levels of the SPY yesterday, and then I will bring up the actual dark pool levels of the SPY, and we can see where rejection might happen. Okay, so we had major buying over $1 billion at open 408. They continue to buy at 410, 411, even up to 412. After 412.55, the dark pool levels buying the SPY got extremely weak. So again, 412.55 is a level I'm looking at. 412.22 is a level I'm looking at. So basically 412.50. Yes, we're starting out over 412.50. We're currently at 414.56, and we closed yesterday at 412.83. So again, what I'm looking for is, let's break it down to the 5 minutes so we can actually go into yesterday. I'm looking at 412.50 right about here to see if there's support or rejection. The fact that we're starting out 2 points higher on the SPY, or 0.5%, and I'm expecting, if the markets told me what they told me, and I'm expecting the SPY to drop by 1%, if not a little more today, you're talking back to the 408 level. So we're talking about the level right here, which is where we started yesterday. So I'm basically discounting all the action from yesterday, understanding volume in yesterday's market was extremely light. So I'm not believing yesterday's market. I'm going to believe the volume that pushes the market when I see it on open. When I see the volume start to spike, then that is what I'm going to be looking for on the day. All right, but let's remove that list. Let me stop sharing it on the screen. I will get to your questions. If you have any questions, please ask them. I'm just going to go to Discord. I'm going to look at the dark pool levels for the SPY. Let me just add it to the stream here. Carlos is busy this morning. Okay, so dark pool levels. Here we go. Somebody check this out at 8 in the morning. I appreciate that. So again, what are we seeing? Well, first, I'm going to start towards the bottom of the level. So please go with me. 399.76 major support, right? 21 billion on the SPY, major support level. 402.23 almost non-existent at 6.23. So I'm just going to ignore that level altogether. I'm going to go up to the next highest level, 14.24 billion at 404.70. Again, not the strongest of levels. You have three stronger levels right up here. So I'm going to see 407.17. That's basically where I'm going to look at as defined support. If I was going to get into calls today and I'm looking for a market drop, then I'm looking at 404.17. 409.64, they were buying that up yesterday. 412.11 is the next SPY range at 16.81 billion. So the fact that we're sitting closer to the 414.58, let's just see where we are right now pre-market. Oh, we're back at 412. Holy shit. Okay, so the market must have just sold off in the past couple of minutes, which makes sense because they shouldn't be buying this market. Numbers came in hot, and the revised numbers came in hot for the past 2 months. They came in 0.2 over what was actually given last month. So instead of dropping 0.1 of 1%, we went up 0.1 of 1%. Well, shit, the markets have been going. Okay, so anyway, let's talk about these numbers again. If there is a push on market open, I'm going to look for it to reject the same number it rejected pre-market, 414.58. Let's remember, 5 minutes after or 2 minutes after the numbers were announced at 8:32, we spiked up to probably like 415 or 416. So again, I'm looking at 414.58 as a rejection point. If we get there, the next dark pool level is 412.11. Understand, based on what was happening in the market, pre-market, let me just get up there again. I'm just going to give you my estimate, my guess estimate of what we're going to see right now. Okay, so the SPY just turned negative. Again, here's what you see. That's what we've seen pre-market. We're going back to that at levels. They tried to pump it. Volume was so damn light yesterday. But again, let's just start fresh, okay? CPI numbers came in at 6.4. the median or the guessing or the average, the estimate was 6.2. A lot of people told me it was going to come in at 6 or under 6. If it came in light at 6.2, even in line with estimates, it's likely the SPY would have topped up to 418, maybe 419 today, and we'd probably have seen 430 to 440 in the future. However, I explained earnings are coming down. Earnings are coming down. Guidance is coming down, bringing PEs up on stocks. The current average is somewhere between 21 and 25 for the S&P 500 companies. Historically, it's been between 15 and 17. So understand, in my valuation, just taking that terminology, I'm thinking the market is probably overvalued by about 6 to 7%. So I'm saying to myself, if the SPY is to drop 6%, let's just say, and we started this morning at 412 up to 414, that's 24 points. If I take 24 points from 414, it puts me back at the 390 level. Okay, so I'm not saying that's happening today, but I'm saying there should be downward pressure. For that to be correct, you're going to see the US dollar increase. You're going to see the 2-year and the 10-year increase. Let's talk about the 2-year and 10-year, right? Interest rates, right? We haven't had this long of inversion, and the inversion has been going on over a year now, where the 10-year is less and the 2-year is greater. Usually it's vice versa. The longer you put away money, the better the interest rate and the return is going to be. Well, it's not saying that right now. It's telling you the 2-year is returning a whole 1% greater than the 10-year. So if anybody was going to invest, they'd be investing in short term. Okay, so again, scenario for the market today. Scenario for the market is everything that happened pre-market, let's just wipe off my plate, wipe out of my mind. I'm saying the SPY closed at 412.83. Let's say 413 yesterday. The market is going to drop because it's 6.4. We came in hot year over year, month over month. So the market's going to drop anywhere from 0.5% to 1.5%, meaning 2 points to 6 points on the SPY. We closed at 412.83. So I'm saying, okay, on the low end, if the market is continuously bought up, we're going to see it somewhere in the 410 range, 410 to 411. If the market is sold off and people actually say, okay, earnings are coming in shitty, guidance is coming in shitty, more Fed speakers, the Fed has to react, job numbers are extremely strong. All these are negative aspects of the market. Again, I don't want to push you into being a bear because every freaking dip this entire year, they've been buying the dip all but 2 days, maybe 3 days. So you're talking about probably like 25 trading days, of which maybe half started to dip. So maybe 12. So 3 out of those 12, 25%, they haven't bought up the dip. Every other fucking time they're buying up the dip. So me, I'm going to tell you, please be cautious. Use the algorithms. How do you use the algorithms? Well, you can join our Discord. It's soc-platform.com. Why is that important? Because if you're joining our Discord and you use Discord and you're like, okay, well, I want to be involved with AMD or something to that extent. So we can do TR. We can check out the net flow for AMD. Keep in mind, I currently am bearish on AMD. So what would I see? Okay, I could see the price is in white. The price is at $83. The cost or the premiums for puts has been increasing ever since a couple of days ago. So you can see, bum, bum, bum. I got involved right here. We had a nice spike after that. It still looks like puts are the way to be. You can see the call, the premiums for calls is kind of staying flatlining. What will probably happen is that will probably drop down to this level and puts will probably go up to this level. And I'm assuming the stock price will probably go down to the 81.50 level around here. So again, I am bearish on AMD right now. I'm also bearish on Uber. So let's check out the net flow on Uber and see, because I mentioned yesterday I thought we can go to 32.19 on Uber. Let me just see what's going on. Okay, so this is interesting. The premiums for calls and the premiums for puts are both at the same level. Uber keeps dropping. So again, it makes me a little more cautious, but as long as the trend line for Uber is dropping, volumes decreasing just a little, I would have been happier if there's more of a volume spike. So I guess I'm going to watch my Uber puts pretty closely this morning. Let's just turn to the SPY now. Again, we're sitting right where we closed at. It's just down minimally. Why? Because people are expecting us to buy up the dips in the markets to get bought up. Again, we're basically flat on the SPY right now. We're 412.51. Understanding if we go back to the dark pool level, let's just go back to say when we could reject. So let me just go back up here. Dark pool, boom, blow this up for you. Everybody else see. All right, perfect. Dark pool level. So again, I'm looking at a large level at 412.11. So let's just call it 412, okay? If I see 412 being bought up and 412 acting as support, then that will tell you that 412 is going to be the baseline. If 412 breaks through, which I think we will break through on that, where can the next downside be? Okay, so we're going to look at the next range. After we break through 412, you're seeing 409.64. So I say plus or minus 30 cents. So I'm really going to look at 410. So again, if we break down, which I think we're going to do, and we're going to turn red this morning, you're going to see a market drop, and then you're going to see just under $410 on the SPY, and you're going to say to yourself, it could easily bounce. Now, what we could see is a double dip. Double dip means we start out the first 5 minutes, and then the market drops, okay? And we hit that 412 number, which isn't that terrible because we closed at 412.83. So you're seeing 412, right? Then you see another dip. So now you're at 410 saying, okay, well, it looks like a little bit of a rebound. Understand, remember the timetable that I told everybody and I've shared multiple times in my videos. At around 10:15, at around 11:15 a.m. Eastern time, 10:15 and 11:15, they seem to fake you out. There seems to be some sort of a reversal. So if the market's dropping around 10:15, they're going to show you a small reversal. Same thing at 11:15. They might show you a small reversal. If the market's going to continue to fade, that's going to be a fake out. So that small reversal shows you the time where you can get back into puts. You'd watch the drop, you sell, you take profit. It spikes back up. You're following your same strategy. Okay, the market's going to drop. This is the strategy I'm following today. If I'm wrong, so be it. I was on fire for a week straight. I had one bad trading day, and then I let it get to me mentally. It prevented me from making 2 trades on Monday that both would have been profitable. Okay, if you like to start out trading in the morning and you like to be active at 9:30 when the market's open, you're looking for the first trade because you have to get to work, because you have to take care of your kids, because you have errands to run, then please, Romeo's going live again this morning on private Discord, soc-platform.com. He goes on at 9:15. He'll speak for about 30 or 40 minutes, including live trading. He tells you exactly what he's looking for at market open. And when the candlesticks make sense and the orb theory that makes sense that he speaks about prior to the market open, then you know exactly when to get in. And he'll mention the exact strike, the exact date, the exact price that he's paying. And then he'll talk about how he's up 20, 30, 40, 50% and how he's scaling out. Yeah, the dude's on fire. He's always making money. All right, so yeah, please, let's see what we got today. Hit the like button, please. I'm looking to answer questions. What do we got? Hey, Josh, man, Algo seems programmed to buy no matter what. Yeah, so understand, this is a great point by Josh. Understand that 90% of the trading in the stock market happens through computers, all right? Happens because of algorithms. The same net flows and algorithms that I was showing you from Discord this morning are the same ones that big money and institutions use. So that's why we see sometimes some major moves upwards or downwards, because the algorithm is telling the trader's system to buy or to sell. So we're seeing these crazy pushes, and then again the rejection points are in place. So that's why when we hit certain levels, all of a sudden you'll see the drop out of the sky. So yeah, let's see what we got here. Josh again, market being bought. I'll set my calls and watch it drop lately. Okay, again, it's going to happen. I'm looking for a drop, first big drop. I don't see any major questions here. So listen, I appreciate everybody. Yeah, my nails are beautiful. Maybe you could do my nails one time, Ellie. Again, market's fluctuating around flat right now. Now it's plus 0.14%. So what's likely to happen is I'm looking, let's get to my market strategy, okay? We've talked about the fake out. So what I'm expecting, to be honest, is I'm expecting a pump on market open, and I'm going to load up on puts. That's just me, and that is a little risky. Again, if you want to be safer, then you want to look for market direction confirmed. You want to make sure it's rejecting if you want to get into puts. You want to make sure it's going to be extremely bullish if you get into calls, because the market manipulators, the market makers are here to fool you and take your money. They want you to think everything is going to be bullish. You jump on the bull train and the market sells off. Vice versa. They're trying to convince you the market's going to be bearish, and then they'll just push the market higher. So again, you want to look at volume. You want to look at the levels of the SPY. Again, 410 flat, 412.50, 414.61. If we break 414.61, which I don't know why we would do, the market would have to be hella bullish today, but you could see 418. If the market wants to get it bought up and break every level going higher, then you're looking at 418. Again, I took a few calls that expired today that had a strike price of 416. I paid very little for them yesterday. I also took some puts that expired today with a strike price, I believe, of 407 on the way down if the market had sold off. So again, I'm going to let the market play out. If we get a spike, what am I going to do? I'm going to sell those calls. If we get a nice dip, what am I going to do? I'm going to sell the puts. I'm going to sell whichever one is making money, and then I'm going to wait for the markets to reverse. Again, use the key levels, 412.50, 414.70, 410 on the way down. If we break 410 on the way down, then you're going to see 407.70. Again, that's where I think we're going to head today. I think after you give the market the first 10 or 20 minutes of the day, and again, pay attention to Romeo. He'll be going live at 9:15. So it's not like you have to guess. He will be sharing with you what he's seeing in the market. We're talking about 1 minute, 3 minute, 5 minute charts that he uses, which helps you either snipe or confirm the turnaround, reversal, or the strength of the market. But you must look at volume. Yesterday's volume was so light. I think we came in the 50 to 60 million range. We're probably going to be double that today. So I'm looking for volume on the SPY to cross over somewhere between 100 and 120 million, which would make me believe the direction of the market. If we finish today at 120 million and the market drops 1%, then it's telling me the market is going down lower. If we finish today at 120 million and the market pops 1% higher, although I think it's supposed to go down, I would be bullish. I would be like, okay, shit, they're telling me the market's going to be strong on good volume. The only thing that could turn that around is more Fed speakers and terrible earnings. So that's what I'd be looking for. All right, with that said, I'm heading over to join Discord. I'm going to drop a video shortly on specific trades that I might be looking for today. There are 2 stocks that I'm going to point out. So if you're interested, please follow us over to soc-platform.com. That's where you'll find us on Discord. And again, Romeo's going live at 9:15. I'm excited for that because I'm actually around this morning to trade. So I'm going to use that strategy. And then I'm going to look at the public watch list. If you haven't joined our Discord to get value from those algo and flow channels, then you have the public watch list and the public chat room, which we're all members and part of. So again, that's been on Pretty Much Fire. Thank you again. If you like what I'm doing, please thumbs up, make a comment below, and I'll see everybody tomorrow morning. We have PPI numbers coming out